All right, Rose, you ready for round two?
Sure.
Okay, so what our point is of these videos is we want to get out there. I want to drill Rose. I want to see if I can stump her and just ask her questions that I'm hearing and what we're seeing about the real estate market and see what her point of view is and see if we can answer some of your questions. Hi, I'm Steve.
And I'm Rose Gonzalez with the Gonzalez Real Estate team. And if you're new to our channel, make sure to give a little love to that subscribe button and click on the notification button so you could be the first to know about what's happening in real estate and in Northern California. So yeah, let's go get started on this video.
Awesome. So I want to do a quick recap of last video. It was on inflation.
Yeah.
And we kind of talked about when inflation goes up, interest rates go up, and when inflation goes down, interest rates go down. Check out that video if you haven't watched it yet. Today I have two questions I want to ask you. And when you see the headlines and you see something like this, you can't help but think, market's going to go down. And what's the first question? The doom and gloom facts that are out there right now is foreclosure rates are up 150%. And this is true. Yeah. You can't deny it. It is true. If foreclosure rates are up 150%, that's scary. And why is that?
Well, so last year during COVID, the government did a foreclosure moratorium. And that means because of the hardship a lot of people were having, they stopped allowing foreclosure. So even if you were default on your home, the government wasn't allowed to foreclose on your home. So it was stopped. So no one was getting foreclosed on. Now they stopped that moratorium, and so what's going to happen? They're going to restart everything again. So obviously that's why the number is up 150%.
So it wouldn't go from 2019 numbers and see if it's gone up or down since then. It's going from when there was zero foreclosures.
Pretty much.
And so when you have zero foreclosures and all of a sudden they lift that moratorium, now they're going off of zero foreclosures, and that's why we have the huge increase in foreclosures, 150%.
Yeah. So
that makes sense.
Actually,
well, what was it compared to before they did that?
So I have the numbers here. In 2022, we had 164,581 foreclosures this year. In 2021, it was 65,000. And then if you take a look at 2019, it's 296,458. So while they say that we are up 150%, we're still half of what it was in 2019 before the pandemic started.
So you take out that time period from when it started in 2021 to when they lifted it, you take that out, we're still under the average of foreclosures per year.
Well, yeah.
Or since 2019?
Yeah. And then if you look back on 2018, 362,275, and 2018 and 2019 were both great years in real estate. We weren't thinking of, doom and gloom things those years. And then if you want to compare it to the actual housing crash that we did have in 2008, in 2008
I do want to compare it.
1,332,991.
So almost 1.5 million foreclosures in 2008.
Yeah. So.
And right now, what is it?
164,581.
So as of right now, we are still really low in the foreclosure rate. Well, why? Is that number going to go up? Why aren't we foreclosing like we haven't before?
So over the last 2 years, how much equity did people gain? We had such a huge price increase that it's like, if you're behind on your payments, go sell your house and make that money. No one.
So I used to hear this term back in 2008, 9, and 10, you were upside down on your house.
Yeah.
What does that mean?
So basically upside down means where you owe more on your loan than you do on the value of your home. So let's say you owe $500,000 to the lender, but your home is only worth $480,000. So you don't have enough equity to sell your home. You're actually below. And so that's why we were having foreclosures and short sales. But because we had such a drastic increase in prices during the pandemic, we have a ton of equity in homes, so people can turn around and just sell their home for profit.
So if I'm in a hardship and I can't pay my mortgage and I even lost my job, the first thing I'm going to do is foreclose. No.
You're going to want to sell your house.
Sell your house, and I can because I'm not upside down. I do
Yeah.
have equity. I could take that equity. I could either probably downsize into maybe a smaller, cheaper home, or if I had to, even rent. But we have equity out there. Right. So we're not going to just be foreclosing.
Exactly.
Correct?
Yeah. Yep. And also, we don't have like the negative loans that we had before that we're adding to the balances of the loans. So a lot of the loans that we have now are fixed rates. So the negative AM loans back in 2008, they would give you a decreased payment, but the difference between the payment and the actual payment gets added to your loan balance. So a lot of people didn't know that that was happening, and so they were losing equity without them realizing that they were doing that.
Okay, so that's going to segue over to the next question. And I would like to talk about interest rates or loans that were given, back then. But a good, strong question, a valid question, and a fear out there is we hear a lot of talks of we're going to be going into a recession, right? And we're starting to see it right now if we're not already in it. And when I hear recession, I hear I want to hold on to my money. I do not want to buy, especially real estate, because if we're in a recession, we're going to have a market crash.
Right.
What do you got to say to that?
So history shows, since 1960, it shows that during a recession, that market actually has stayed strong throughout. We have data that shows...
2008, we had a huge crash and we're in a recession.
So the 2008 recession was the only one. So we've had it since 1960, we've had 9 recessions. And that was the only one where the housing market really took a dive because the recession was a housing-led recession. So what happened in 2008 is because of the loans that they were giving out back then. So if you had a credit score and a social security number, you pretty much can buy a house. So they had loans where you could say, I make this much money and I have this much money in my bank, and they would not verify it. And
so you say you could say that and they wouldn't need documentation?
No. So it was really a time where people who weren't qualified, like truly were not qualified to buy a home, bought a home with zero down.
Why would they do that?
I don't know. It was crazy. A lot of the lenders were selling these NEGAM loans and not really explaining to people what happens to the difference in their mortgage balance. It was the craziest thing. Like these negative...
It's like the wild, wild west out there.
It was.
It's crazy.
Well, and the thing is that the lenders made a ton of money on these NEGAM loans. Like instead of getting like 1% of the loan amount on a standard loan nowadays, they were getting like 3-4% back then, and they were just making so much money off these loans, and it was ridiculous. And that's why a ton of people foreclosed, because one, it was 100% no down payment, and then another type of loan was that negative AM, where it was adding to their loan balance without them realizing that's what was happening.
What about adjustable rates back then?
Adjustable rate mortgages, they did exist. Again, they still exist now, but you have to be educated on how to use them. I think it all goes down to the fact that people can buy a home back then without really verifying that they can afford it. I had, clients who were making, $100,000 a year, but their mortgage payments were like double what their monthly income was. And they were qualifying for these loans because they said on their loan application, this is how much money I made, which made them qualify for that house. But in reality, they had to pick up second jobs or under the table jobs to really make that payment. And so people were just going through a lot of hardship trying to consistently pay for that.
So in 2008, if you wanted to buy a home, you could. The loans were out there. The guidelines to getting a loan were almost, I don't want to say non-existent, but it's very easy to get a loan. So when you see your friends buying a house and your family members buying a house, and they make just as much as you, and they're buying multiple homes, and they're gaining equity like that while it's being built, that's going to kind of have you have fear of missing out, right?
Yeah.
And you want to buy a house too.
Yeah.
And then you want to buy another one because I want to be an investor. And we're seeing the equity go.
Yeah.
And I'm getting any loan I want to help pay for the payment, which is going to be an extremely low interest rate that eventually will adjust. But I'm not really thinking ahead. I'm thinking of, I could make this 2% interest payment for a couple years and I'll worry about that later.
Yeah.
If it's going to keep going up forever, I could refinance out of that.
Yeah.
Okay?
Yeah.
And so everybody's buying a home.
Yeah.
Interest rates start to change. They start to adjust. And they start adjusting higher and higher. And more people started not being able to afford their homes. Yeah. And so then foreclosures started, right? Yeah. And with those foreclosures starting, you started seeing more people seeing that the bubble was going to burst and pull away from buying houses, which in turn kept bringing the prices down. And then it just started this huge...
Yeah, and also at that time, the builders were building a ton of homes. I think they made like 4 million homes, and our demand for homes were like 1 million or 1.2 million or something. So there was like
so they had FOMO too.
No.
They wanted to capitalize. Let's face it, when we see things going up so high, we want to chase the money. Yeah. We saw that in the stock market in 2021 where it crashed, but then it started skyrocketing. Everybody got on the stock market, right? Because they want to fear of missing out. And we see that in real estate too, right? Am I wrong on that? You know?
No,
a little greed.
Well, so that's the problem now, is that the builders are like, I ain't doing that again.
Did they learn their lesson?
Yeah, for sure. So like, I think right now they're capped at like 1.4 million. And, the housing formation usually ranges between 1.2, 1.7. Right now, I think I heard it was at 1.2 because, the interest rates went up, so people are more inclined to stay with their parents or have like multi-generational homes because it's too expensive to go out and get your own. So I think it dropped down to like 1.2. And so when, interest rates go back into like a normal range where people feel more comfortable buying, like next year, the housing formations are going to go back up to maybe like 1.7. And that's where, the kids are going to be like, hey, I'm going to buy my own house. Interest rates are decent, 5%, 4.5%. So, then we'll still be in a housing shortage because the new builds are, only making about 1.4 million homes. And just to clarify, when we talk about supply and demand, housing formation is when, like, let's say you and me, we have a family, we live in one house, but our 25-year-old daughter is old enough to go buy her own house. They said that an average person buys their own home at about age 33. And so that makes a two housing formation. So it's our house and then their house. And then when it talks about demand, they're not talking about resale. They're not talking about completed homes. They're talking about how many homes, new construction, the builders are actually making. So that's kind of where supply and demand is.
So let's recap on the two questions. The first one was foreclosures are up 150%. And the answer is there's a moratorium that was put in place because of the pandemic we entered through COVID, and they stopped all foreclosures during a certain period of time. And so when they lifted that moratorium, obviously there's going to be a huge spike in foreclosures. But if you still go back to before the moratorium in 2019 and 2018, we're still
about
half of what it was. So that kind of clears that question up and makes, when you look at it that way, it's like, oh, okay, I could breathe with that question right there. But what about the other question? We're going to go into a recession.
Yes.
And then there's 9 recessions that we've had since 1960, and only one has been housing led, which brought the housing market down. But in all other recessions, the housing market actually
got better. And here's why.
During the recession.
Yes, and here's why. Because I know some people may ask this. I know there's been a lot of talk on unemployment rates. So one other thing that happens is that recessions actually start when unemployment rates are low. And, you know, when recessions begin, industries start slowing down. And so they got to lay off people. So that's where the unemployment rate starts creeping up. So there's actually some data that shows that recessions happen when unemployment rates are low. And then during the recession, it goes up. But what happens during a recession? They drop, the Fed drops the rate to help stimulate the economy, and then interest rates go down. And so that's why the housing market actually does well in recessions. So, you know, people really need to understand there's a difference between like the stock market and the real estate, you know, when it comes to different things like this.
See, guys, our point is we want to be as unbiased as we can. We are realtors, so yes, we might have a little biased opinion, but the truth is, when we watch news all the time and when we just hear from people that aren't experts, you could get sucked in. I could watch the news about what's going on in the world and I just start to believe everything, right? And that's kind of what I'm hearing with real estate as well. But when you actually take a second to step back, listen to what experts, even unbiased experts, have to say and pull back the scale and look at the history, it's easier to gauge that way. And when you hear headlines, foreclosure rates up 150%, but then we discuss what we did, we're like, oh, well, there's a reason for that.
Yeah. Well, I mean, I think the news, you know, are fear driven. Rates go up when people, you know, watch it, right? And so people watch the news all the time because they're like, what's going to happen? What's going to happen? But I think that people should really be open-minded and really look at actual facts. And that's where, you know, we are trying to give that information out as far as history and whatnot. So I don't know. I hope this helps.
I hope it does too. We're going to keep doing series like this. And if you guys want to comment, what questions do you guys have out there? We'd love to get on here and answer all your questions. And again, I am Steve.
And I'm Rose with the Gonzalez Real Estate Team. If you're new to our channel, make sure to give a little love to that subscribe button and we'll catch you on the next video. Bye.
See you guys.